Getting rich has nothing to do with inflation, as long as you make savvy financial decisions. Says who? Well, this financial piece of advice comes from the wealth wizard, Elon Musk himself. No one in their sane mind can deny the fact that any financial advice coming from Elon Musk is no ordinary thing, especially during uncertain economic times with high inflation and low standards of living. Making wealth appears like a dream to many. Masses usually have the mindset that growing rich during inflation is next to impossible. Well, billionaires like Elon Musk do not think so. Last year, when inflation hit a 40-year high for the first time, Elon Musk posted a thread on Twitter. Mr. Musk advised followers to own physical things during times of inflation. In the tweet, Musk said, "As a general principle, for those looking for advice from this thread, it is generally better to own physical things like a home or stock in companies you think make good products than dollars when inflation is high. And I still own and won't sell my Bitcoin, Ethereum, or Doge Fui." The biggest takeaway for some followers seems to have been that Musk is still holding his Dogecoin because the cryptocurrency's price saw a temporary spike shortly after the tweet. However, the more important point to Musk's message is that physical assets are generally the safest investment during times of high inflation. While inflation is finally starting to cool off in the US, it still remains fairly high. This means Musk's advice to own physical things is still just as relevant today as it was a year ago. But the question is, what physical things you should invest your money in to make more wealth? Well, lucky for you, I have brought you a list. Don't forget to subscribe to this channel if you want to have a wealthy and successful future. So here are 3 investments that have historically performed well during periods of high inflation. 1. Real estate. Real estate has always been considered as one of the most profitable investments, particularly in the United States. This incredible investment venture is a popular way to build wealth, generate passive income, and create long-term financial stability. Real estate provides a range of options for investors to choose from, such as residential, commercial, industrial, and even agricultural properties. So, in line with our financial guru's advice, real estate is a tangible asset. It tends to appreciate in value over time, making it a valuable investment. According to the National Association of Realtors, NAR, the median price of existing homes in the U.S. increased by 12% in 2020, the highest annual increase in over a decade. The U.S. real estate market has historically experienced a steady rise in value, and this trend is likely to continue in the future. This is because real estate is a finite resource, and as the population grows, the demand for property increases, driving up prices. Another factor that makes real estate such a profitable investment is that it provides a reliable source of income. Investors can generate income from rental properties or by buying and selling properties at a profit. You already know that rental income provides a stable and predictable income stream that can cover the costs of the property and generate passive income. According to a report by the Urban Institute, between 2005 and 2015, the average annual return on single-family rentals was 9.27%. Well, if that is not persuasive, what is? The most incredible thing about real estate investment is that it provides tax benefits. The U.S. tax code allows real estate investors to deduct certain expenses, such as mortgage interest, property taxes, and repairs from their taxable income. This can significantly reduce the amount of tax owed, resulting in increased returns. Moreover, capital gains from the sale of a property held for more than a year are taxed at a lower rate than regular income. Finally, the U.S. real estate market is highly liquid, providing investors with the flexibility to buy and sell properties quickly. The real estate market is large and diverse, offering a range of investment opportunities to suit different investor needs and preferences. So you have got the idea. The bottom line is, with the right research and due diligence, investors can find profitable investment opportunities in the U.S. real estate market and build long-term financial stability. 2. Fine art. Art has been a popular method for storing wealth for generations, which is no surprise, considering that it has outperformed the S&P 500 for the past 25 years and appreciates at an average rate of 23.2% in years where inflation is at least 3%. So the thing is, fine art is an increasingly popular investment choice among high net worth individuals, with many turning to the art market as a means of diversifying their portfolios. One reason for the popularity of fine art as an investment is that it has historically offered excellent returns. In recent years, the global art market has grown to over $60 billion, with the U.S. accounting for a significant portion of this market. One of the reasons that fine art makes an attractive investment option is its relative scarcity. Each piece of artwork is unique, and many works are one of a kind. This rarity drives up prices, especially for works by famous artists. Also, if you are an admirer of art, you would already know that art has a timeless quality, which means it can appreciate in value over time. While other investments may lose value as they become outdated or out of fashion, fine art retains its value because of its cultural significance and historical relevance. In recent years, the market for contemporary art has grown rapidly, with many collectors and investors turning their attention to emerging artists. This trend has created opportunities for collectors to acquire works by up-and-coming artists at lower prices, with the potential for significant appreciation and value over time. Overall, fine art can be a lucrative investment for those with a deep understanding of the market and a willingness to take on risks associated with investing in such an investment venture. 3. Luxury items like cars, bags, watches. So, another physical asset on the list is luxury. Sounds cool, right? So the point is, luxury items like cars, bags, and watches are profitable ventures for investment because they are associated with high levels of craftsmanship, exclusivity, and prestige. These products appeal to consumers who are willing to pay a premium price for high-quality items that are associated with a certain status or lifestyle. Luxury items can be the best form of investment during times of inflation because they often hold their value over time. For example, luxury watches from brands like Rolex, Patek Philippe, and Audemars Piguet can appreciate in value over time, making them valuable investments for collectors and investors. According to a report by Knight Frank, the value of collectible watches increased by 5% in 2020, outperforming many other asset classes such as stocks, bonds, and gold. Similarly, luxury handbags from brands like Hermes and Chanel can also hold their value over time, with some rare bags selling for millions of dollars at auction. Another reason why luxury items can be profitable investments is that they are often limited in supply, which creates scarcity and exclusivity. For example, luxury car manufacturers like Ferrari and Lamborghini produce a limited number of vehicles each year, which makes them highly sought after by collectors and enthusiasts. According to a report by Bain & Company, the global luxury car market was worth $465 billion in 2020, with sales expected to increase by 15% in 2021. Similarly, luxury handbags from brands like Hermes and Chanel are often produced in limited quantities, which makes them more desirable to collectors and can drive up their value over time. And of course, luxury items are associated with a certain lifestyle or status, which can make them more appealing to consumers who want to project a certain image or identity. For example, luxury cars like Rolls-Royce and Bentley are often associated with wealth and sophistication, while luxury handbags from brands like Louis Vuitton and Gucci are associated with style and glamour. According to a report by Deloitte, the global luxury goods market was worth $281 billion in 2020, with sales expected to reach $327 billion by 2023. So you have got the point. Luxury items like cars, bags, and watches are profitable investments because they are associated with high levels of craftsmanship, exclusivity, and prestige. These products appeal to consumers who are willing to pay a premium price for high-quality items that are associated with a certain status or lifestyle. With their high value, limited supply, and durability, luxury items can offer investors a unique opportunity to invest in assets that are both functional and highly desirable. So if you are thinking to make an investment at a time of high inflation, such as now, I would advise you to go for any of these three options. The reason is simple: they are profitable, and after all, your goal is to grow rich, isn't it? But before you make any decision and put your money into any venture, it is important that you do the research and find out which investment plan suits you the best. So that was all from today's video. If you want to become rich this year, then proceed to this video. Thank you.